Hi, and welcome back to the deep dive into the pharmaceutical company AbbVie. Now let's take a look at the technicals for AbbVie. Remember what we are trying to do here. We are looking for useful, that is reliable trends, trends that other investors are creating in the share price as they are jostling for maximum returns. So remember, on the market, what creates the share prices are, of course, the relative urgency and the relative eagerness with which other investors are selling one stock in order to buy another, or perhaps actually borrowing money in order to buy a stock, maybe more of something they already own and something that is trending and they are starting to really believe in and are feeling a fear of missing out. They want to not only grow with the share price, they want to buy even more shares. So this is what is creating the trends and the patterns. And when a stock garners interest, the stock price moves up, of course, as investors become more and more eager to buy it. For some reason or another, it peaks out and corrects a little bit downward, and that makes weak hands sell, which creates a counter trend for a while. But if the stock has a strong positive underlying momentum from new investors, perhaps investors that have been checking it out for a while during its rise and have been just waiting for that correction in order to get it a little bit more cheaply, or perhaps more strategic investors who understands these patterns and these cycles of interest, of fear and FOMO, and they have as a strategy to always buy on dips and sell a little bit on relative peaks. So this is what creates these peaks and troughs. It's weak hands, it's urgency, it's access to money, access to perhaps borrowed capital, or on the other hand, a more tragic end of the spectrum is forced selling, perhaps because you have the investor has borrowed against its shares and therefore can't withstand even a small share price correction, and then they have to sell. The 200-day moving average is the long-term sum of all things, I would say. It's over 200 days of trading. The 200-day moving average shows the total trend of whatever earnings reports have been filed over the last 3 quarters, whatever emotions investors are grappling with, and whatever financing they can get hold of. I mean, they get the regular wages, but they also maybe can increase their mortgage, they can take out a bank loan, they can keep increasing their stock portfolio leverage, borrowing against the share portfolio. So if it's going up, their room for taking on even more loans against the portfolio increases. But if share prices goes down, they have to keep selling or put in more money as collateral. We also have, of course, the news media, and whatever is happening in terms of regulations, the politics, etc. So all of this is encompassed in a way in the 200-day moving average. That is why we are even considering that type of a technical analysis a factor that really has nothing to do mechanistically with what the company is creating. For example, AbbVie. I mean, they are researching, they are coming up with new drugs, they are trying them out in clinical trials, they fight with the FDA in order to get it approved, and then they fight with other companies to get doctors to prescribe it. So they have costs in terms of creating patents and using their know-how and their best practices of operations. They have costs for wages, for distribution, for marketing, and then they have revenues, of course, for each pill they sell, and this is how they make their profits. But that it has really nothing to do with the 200-day moving average or other technical factors. But what happens, of course, is that investors, they pay attention to a lot of things in order to make themselves as rich as possible. So among other things that they do consider is the news and the state of play for the entire market or politics. And they pay attention to the earnings reports and guidance and whatever news come out of the companies. And by paying attention to all of this and then putting their money to use, buying and selling shares, not least selling other shares, other assets, taking out cash from their bank accounts, that is prioritizing buying, for example, AbbVie and selling other things. That is what's happening, and that is what creates perhaps a positive trend for AbbVie and a negative trend for something else that is not as much in vogue. So let's take a look at AbbVie's technical, what the share price is looking like right now. So here we have a 10-year chart for AbbVie. And as you can tell, it's been on quite a positive run here, at least since, well, actually all the entire 10-year period. So you see the bottom here is really back in 2016, and the worst point in history after that is in March 2018. So still, it's more than 7 years away, and in between, we can see this constant oscillation around the 200-day moving average. Well, of course, an average is an average, and you're supposed to oscillate around it. Unless you're moving constantly upward, it will lag behind, of course, or constantly downward. One interesting thing, I think, about this share price pattern here is that, again, we see how AbbVie doesn't really honor the 200-day. I mean, it can move freely up and down around the 200-day moving average. So it doesn't really say that much in this particular instance. I don't know why that is, but for some reason, the 200-day doesn't sway investors in any direction. Right now, let's zoom in a little bit. Right now we can see that lately, well, there maybe has been kind of a pattern to take it into account. When falling below, you tend to crash below, and then you kind of honor the 200-day, and then when going up above, then you move swiftly up and forcefully up. But then again, something happens and just crashes right down through the 200-day. For now, we are below the 200-day, but again, it doesn't seem to be that important for AbbVie. And then let's take a look at the technical formation for the overall market. Let's see. Here is the S&P 500. If I zoom out a bit, we can see that we used to have a long positive trend for several years here. And just recently, as we've pointed out before, we crashed below, fought back just above the 200-day, but now it seems as if we are more or less bound to break down below again, making this kind of a fake break above, meaning I actually think that it's all about the tariffs and the weakening economy and high valuations. All these things factor in together to create a negative macro environment and a headwind also for the general markets in terms of technicals. So we have a kind of a negative technical formation for both the company and for the overall market.